Riggs in San Francisco. This is Bloomberg Technology. Coming up in the next hour, trade truce. The U.S. and China are set to reach a partial trade deal in the latest round of talks. As for China-dependent Apple, analysts grow more positive on the company. Its shares trading back at record levels. Plus, WeWork on life support. The co-working space is in talks for a $5 billion debt package injection, as the company could run out of cash next month without new financing. And the week that was, from tech in the crosshairs of Hong Kong pro-democracy demonstrations to now eBay, Stripe, MasterCard, and Visa all bowing out of Facebook's cryptocurrency group. We run down the big tech stories of the week. But first, our top story. There has been a breakthrough in U.S.-China trade talks. On Friday, President Trump said we've come to a very substantial Phase 1 deal. That was in an Oval Office meeting with China's Vice Premier, He. He is not part of the discussions, though. What is not part is Huawei. To discuss, I want to bring in Bloomberg's Sarah McGregor. Sarah, first, talk to me broadly here. What did we learn about Phase 1 of the deal today?
So what we do know about this deal, which Trump, he describes as substantial, and I think that a lot of people will be sort of parsing through the details of this to try and see if that is the case. But what we do know is that the Trump administration has said that they've reached agreements on some intellectual property issues. There's a currency pact inside this agreement. There's going to be agriculture purchases, significant scale up to $40 to $50 billion from China of American agriculture exports over the next couple years. These are just a few of the aspects of it. And again, this is sort of a Phase 1 deal. Importantly, though, it is not written on paper yet. This came out of these face-to-face talks that were happening in Washington between U.S. and Chinese negotiators. And over the next 4 to 5 weeks, we expect that to get onto paper. And Trump says he wants to sign it at the APEC summit in Chile. So there's a lot of work to be done in the next few weeks to even get this deal sort of as firm as possible, to get those details down.
Well, Sarah, our technology audience ears perk up when you say IP and intellectual property, specifically around IP. What do we know from this deal?
Well, the interesting aspect of this is that all of these details have trickled out of a press conference that Trump gave with He, with the Treasury Secretary and the U.S. Trade Representative, and we don't have a lot of details. We could only get what they verbally told us in these agreements. I think you importantly brought up that they did specify Huawei is not part of this deal. There have been rumblings that perhaps these licenses for American companies to be able to do business again with Huawei might come as part of an early Phase 1 trade deal. And the Trump administration explicitly said that isn't the case.
Sarah, we have a soundbite from Robert Lighthizer on Huawei. Take a listen.
In this agreement, we're not dealing specifically with Huawei. It's not part of this agreement. That's a separate process.
Sarah, so we think Huawei not part of Phase 1. Any indication that it could be included in Phase 2 or 3?
I think that, it could also be billed, as Robert Lighthizer said, as something of a separate process. And so perhaps they want to leave it out of the announcement today, but it is something that will come down the line in the coming weeks. Of course, we have those special licenses that are coming up for renewal in November, mostly for rural networks and for, a certain type of license to be able to sell to Huawei. So we'll see what comes of that. There was mention at the press conference of looking again at these blacklisted companies like Huawei. We had the other additions this week, like Hikvision. So, I think they're not part of or being billed as part of these trade negotiations, but perhaps there is some movement of that, along the way.
Sarah, I think the question we keep asking ourselves is a partial deal better than no deal, even though it's not fully comprehensive?
I think, a lot of American businesses right now and economists, people are watching the economy, may think this partial deal is a good thing, at least for the fact, of course, that it delays this tariff increase to 30% from 25% on a big batch of Chinese goods that was scheduled to take effect next week. The next batch, of course, are these December 15th tariffs that'll hit things like Apple iPhones and other things like TVs, unless some exclusions are made. So we don't know if those tariffs have been excluded yet. The Trump administration said today at the press conference that that's a decision to be taken later down the line. But I think the fact that there's this suspension of the increase of tariffs for next week, that will be seen as a good thing, at least for the global economy, for U.S. businesses.
Giving me the latest on trade is none other than Bloomberg's Sarah McGregor. Thank you for joining me. And now, sticking with trade, we fold that over into Apple. Shares rose to an all-time high on Friday as investors look past a year marked by turmoil from the U.S.-China trade war and uncertain demand for the iPhone, a product that Apple is moving away from, but which it does remain very central to its business. Joining me over the phone to discuss, it's Wedbush analyst Dan Ives. Dan, briefly from the trade deal that we have so far today, does anything about this trade deal change your stance on Apple?
I mean, look, I view this as incrementally positive, specifically around the December 15 tariffs. That was the big worry for Apple and tech investors. And right now it looks like that's going to get pushed, or potentially, that temporary reprieve could be potentially permanent. I think if that happens, that could add $15 to $20 to Apple stock in terms of those tariffs potentially being off the table.
Dan, what was included in those December tariffs that makes you so happy that they're not going into effect?
Look, those are really what was going to hit the hearts and lungs of Apple in terms of processors, smartphones to U.S. consumers. That would have been about a 4% hit to EPS if that came through. And that's also across the whole tech food chain with semiconductors as well. So that's why this was such a key to that December 15 tariff. And look, overall, Apple's the poster child for the U.S.-China trade war. Any positives is a positive for Apple. It's a positive for semis. And I can tell you right now, talking to tech investors the whole day, they're starting to pop the champagne relative to the dark days we saw 2 weeks ago on the U.S.-China trade war.
What was the biggest question from those tech investors today?
The biggest question is, what's happening today, how does that impact December 15 tariff? That's the $160 billion that's the key to not just Apple, the whole tech ecosystem. And right now, in terms of reading the tea leaves, it looks like that's something that's going to get pushed at a minimum or potentially off the table. And that right now, I think many tech investors view it going from a yellow light to a green light in terms of owning tech stocks because of U.S.-China.
Any sort of read-through from Apple to the Apple suppliers? Can you quantify a boost to the bottom line for Apple and then some of those suppliers?
Yeah, I mean, in our opinion, this is something that it's probably what I view as about a 3 to 4%, to quantify it, improvement to what we can see from a cost perspective. And if that flows through to suppliers, that would have been basically a cut of 3 to 4% demand. That's now not going to happen. And that you feed that through suppliers, through semis, through Apple, that's a massive ripple effect, which is a major feather in the cap for any tech investor bullish going into year end.
Is it too soon then to say that Apple no longer needs to look at manufacturing outside of China? We knew that they had talked about shifting some of that supply chain to other regions in Asia. Would you say, though, that this deal's still too tentative to firmly stop those moves and keep it in China?
Yeah, look, I still think it's too soon to call any major changes there. They're still looking at Vietnam and India, potentially 5 to 7% production over the long term. But this definitely does change the game, because for Apple, you go back 6 months ago, I mean, this was kind of in the red zone in terms of the worries, in terms of China. Now that there looks like it could be not just a phase one deal, but other deals that could come forward, this definitely puts it in a situation where right now I don't see anything majorly changing for Apple when it comes to China. And look, they could double down when it comes to production as well, and that's something we need to see as this goes forward.
Dan, before we got all of this news of a trade resolution, a potential resolution, you came out with a bold call that moved the stock, closed near record highs. You raised the price target to a $265 from a $245. Does anything about this deal boost that price target higher than $265, given this is new information and when the facts change, the fundamentals change?
Yeah, a great question. Well, what I would say is that right now there's about a $15 to $20 overhang on Apple stock because of the U.S.-China black cloud. If that's removed, that's something that can incrementally add that value to the ceiling where Apple stock to go. So I think right now, that's key. And you look at what's happened with iPhone 11 demand in China. You think it's talking about 20% of ahead expectations. Plus, you have services coming. I can tell you right now, Cook, with his back against the wall, and Apple, they're going to come out swinging later this month in earnings. And I think bears are going to have to continue to go back into their caves and hibernation mode.
Coming out swinging. That was Dan Ives of Wedbush. Thank you for joining me, all things Apple and trade. Now, eBay, Stripe, Visa, and MasterCard are all abandoning Facebook's cryptocurrency project, Libra. All four were members of the original founding group of tech and finance companies that made up the Libra Association. PayPal announced it was leaving the association last week. The remaining members are due to meet in Geneva Monday and sign a charter agreement. Facebook shares paired some of the day's gains as news of the exits trickled out Friday afternoon. And we will have more on the exits from Libra and the challenges facing Facebook later in the show. Don't worry, those are just the Blue Angels flying by practicing for Fleet Week. Coming up, Dash for Cash. WeWork's running out of money, but lenders could be coming to the rescue. What this means for the troubled startup's future, that's next. This is Bloomberg.
The vice premier's just left my office. We have
and I want to take a listen at President Trump speaking to reporters. Let's listen in.
5 weeks, hopefully it'll get finished. Tremendous benefit to our farmers, technology, and many other things, the banking industry, financial services. And I guess by now you know pretty much we've had a very, very good couple of days with China, and it looks like that deal is very much on its way. It'll be the largest deal ever made for farmers. We're talking about a $40 to $50 billion purchase and other things. I mean, it's an incredible deal for farmers. I think they'll have to go out and buy more land and buy bigger tractors. So we'll hopefully get that done pretty quickly. Well, we'll take a look at it. We'll take a look at it. This will go a long time into the future. This is a buy. This is a very big buy. It's 2 years, but it'll go a long time into the future. The biggest deal made was $16 billion, and this could be 50. So this is many times more, many times bigger than any deal ever made for the farmers. Say it? Oh, they'll keep their word. China's going to keep their word. They want to make the deal. They're going to keep their word. Well, I don't know. I haven't spoken to Rudy. I spoke to him yesterday briefly. He's a very good attorney, and he has been my attorney. Yeah, sure. Steve? Well, we're looking at it. We didn't discuss that, Steve, on this deal, Huawei. We didn't discuss it having to do with phase one. This is phase one of an either phase two or phase three deal. So we haven't discussed Huawei relative to this deal. So basically, the status will remain the same. Well, she may be a wonderful woman. I don't know her, but she may be very much a wonderful woman. If you remember the phone call I had with the president, the new president, he didn't speak favorably, but I just don't know her. She may be a wonderful woman. Well, I'm not going to talk about it now because we're just starting the negotiation of phase two. We'll actually begin as soon as we're finished papering phase one. But phase one, it's one of the biggest deals ever made, and unbelievable for technology, unbelievable for the banking industry and services, and for the farmers, there's never been anything like it. Well, we're going to see what happens. We're going to be discussing that in phase 2. Who? Well, the whistleblower's been very inaccurate. The whistleblower, I don't know what kind of a whistleblower. The whistleblower reported a totally different conversation than I had. I released a transcript of my conversation, an exact transcript, and the whistleblower didn't say that. The whistleblower is either saying untruths, okay, or he didn't know, or he's making up a story like Schiff did. Schiff made up a story because when Schiff read what I actually said, he said, I can't say this because he did nothing wrong. So Schiff went out and he made up a lie. He made up, it was a fraudulent story. You know that. You know that better than anybody. You're a good lawyer. And frankly, he went out, he made up a fraudulent story. He then went before the U.S. Congress and the American people, and he reported a fraudulent story. Now, Schiff, something should happen to Schiff for that. He shouldn't have immunity for that. Why should Schiff be given immunity when he goes out and he says a story about the President of the United States, what the President said, and it bears no relationship? In fact, every word was different. And I'll tell you what, I can't believe that a congressman could be that dishonest.
That was President Trump talking to reporters as he departed the White House en route to Joint Base Andrews. And this is Bloomberg Technology. We'll have more next. This is Bloomberg. WeWork is looking to make sure it has cash to keep going. The office-sharing startup is in talks with J.P. Morgan and others on a $5 billion debt package. That's according to sources. This comes after what was once a highly anticipated IPO, and that fizzled out following questions about the company's valuation and governance. Sources tell Bloomberg that WeWork needs new financing before the end of November to avoid running out of money. To discuss, I want to bring in Bloomberg's Ellen Hewitt, who has been tireless on all things WeWork. So first, talk to me. What do we know about this potential $5 billion deal?
So we know it's still in discussion. It could start getting formalized as soon as next week, but could also stretch out over the next week or two. But their time pressure is on. As our sources have been telling us, WeWork needs cash and needs to line up some new infusion of cash in some form before the end of November. Otherwise, things are going to start going downhill. So I think initially people thought that based on WeWork's burn rate, that maybe that was going to be a time that came more like mid next year, but it seems like it's sooner. So the pressure is definitely on. And now that the IPO is not going to happen this year, they need an alternative source of money.
Any sense of what happened? Because we sat here and we heard analyst after analyst say mid-2020, they won't have to go to the debt or the equity markets. What happened that that timeline moved up so quickly?
It's possible that people are just reassessing just how quickly these things might change. Maybe they thought that they were going to have access to more cash from selling off assets or divesting from some of the investments they've made, and those are not coming through. It's a little hard to know, but nevertheless, I think it's become clear WeWork is strapped, and they are also expecting to cut a lot of jobs in the next few weeks. You know, we had reported, I believe, last week that at an all-hands meeting, the new co-CEOs and the remaining co-founder told staff, you know, to expect job cuts to start coming in October.
You mentioned selling off some of the assets. Walk me through this strategy. We know that they're looking at selling off a stake in Wing, the private jet, which makes sense. And then today there was news about WeGrow, which was an elementary school that now they're thinking maybe it doesn't align with our core business. What do we know about how the sell-offs of these stakes are going?
So there have been some side businesses that WeWork has acquired over the years that we've reported are up for sale. That includes Meetup, Conductor, I believe Managed by Q is one we've reported as well. These are acquisitions that the company has made over the years that they hope to be able to sell off. Now, I think when you look at the scale of WeWork's losses, it's not clear to me, and I think to other observers, that some of these asset sales are going to make a huge dent in the amount of money that they need to be figuring out how to get back. And so I think it's unclear how that strategy is going to go. And as you mentioned, WeGrow is sort of in a different case. This is a business that was started within WeWork, in fact, started by Rebecca Newman, who is the wife of the CEO, Adam Newman, and was also considered a co-founder herself. She had founded WeGrow, which was this elementary school. And so it's not that was an acquisition. This is just a side business that WeWork got into that everyone always looked at and thought, like, why? And now it seems clear they've told parents of students today that the school will no longer operate after the end of the 2019-2020 school year.
And finally here, it's always the detail that matters. And the fine print of this deal looks like it could be 475 plus LIBOR, which was the last deal that they had in terms of this $5 billion loan that's in the works with JP Morgan. Any sense of how much that rate goes up on a new deal given the cash crunch that they're under?
I'm really not sure. I think it's just people are going to be watching very closely to see what other decisions WeWork makes to show that it has control over its balance sheet. I think there has been a lot of skepticism around the way that they handle money, the way that they make decisions about finances, and that's going to probably be the biggest question that the new co-CEOs have to face, which is how are you going to right this ship? Like, how are you going to make sure that WeWork goes forward, as they've said they want to do, as a viable business with a strong core business of flexible office space.
Thank you to Ellen Hewitt of Bloomberg Technology. Now I want to look at how WeWork space is affecting the economy and on the minds of the Fed. For more, I want to bring in Mark Vittner. He's Wells Fargo senior economist from Charlotte. Mark, thank you for joining me. I loved your piece talking about the impact that co-spaces are having on the economy. What is your take on sort of the long-term durability of this space and its impact on financial stability?
Well, I've listened to Eric Rosengren's concerns, and I understand where he's coming from, because this is a new innovation. And whenever we've had new innovations in real estate, they haven't done all that well when a recession's come around. But co-working space has been around for a long time. And I think in this particular business cycle, the ability of companies to try a market out, and for large companies and established companies to open a technology office in Charlotte or Raleigh or Nashville and try that market out without having to make a major capital commitment to build a building or a long-term lease adds a lot of flexibility to the economy. I think it's in effect just-in-time office space, and I think that may actually help mitigate the real estate cycle.
So talk to me more about the risks that this type of office leasing has on the broader commercial real estate market.
Well, certainly the business model is risky, and that's why that's probably why WeWork is having such problems going to the market. And they may have done better if it wasn't this late in the business cycle, and we didn't have an inverted yield curve and people thinking about a recession, that a recession was just around the corner, which we don't, by the way. But co-working spaces only accounts for about 2% of the office market. And so it is not that large a piece. It has accounted for a larger proportion of the growth of the office market in a lot of the tech-centric cities. And that's where some of the concerns come in from the Fed. And they're thinking, okay, tech is where the fastest growth in the economy's been. When funding begins to dry up, it's likely to get hit pretty hard, and many of the tenants in co-working space are likely to run into trouble. I think that's probably close to the way things are going to play out, but I think there's a lot of established companies that are tenants there too, and I think they're going to hold on fairly well. And on top of that, in recessions, you tend to get a lot of innovation as companies spin off divisions, as companies cut back their workforce and people go out and start their own businesses. Those are ultimately going to be customers for this co-working space.
And always smart, Mark Vittner of Wells Fargo. Thank you for joining me. And coming up, leaving Libra. Facebook's proposed crypto loses 5 potential partners. Why companies are saying no to the social network. That and more in our This Week in Tech. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. October, the month for Libra, but it wasn't a good month for Facebook's cryptocurrency. Already this week, PayPal has dropped out of the social network's crypto association, and now 4 more payments companies have said no thanks to Libra. On Friday, eBay, Stripe, Visa and MasterCard all abandoned the project. It's the latest blow to the troubled effort that has drawn criticism from lawmakers and others. To discuss, I've got Bloomberg Opinions' Shira Ovide in New York. She's been covering the topic this week. And joining me from Los Angeles, Wedbush analyst Michael Pachter. Michael, let me start with you here. What's your take on all of these companies abandoning Facebook? How much more of a hurdle is this now for Facebook?
I think it's insurmountable. I don't think Facebook can do this by itself. The only thing that they bring to the table, and it's a big thing, is a couple of billion users, and a billion, active users. And obviously, Facebook thinks that its relationship with its user base is such that it can cross-sell them some access to a currency. But without the banking system behind them, without the payments processors behind them, I don't think they can pull it off. I don't think they're capable of building out that infrastructure themselves. If it's not accepted at places where Visa and MasterCard are accepted, it's just not going to work. So, short of a big bank stepping into JP Morgan and saying, we're all in and we're going to support this no matter what, I don't think this can ever happen.
Shira, in your opinion, should Facebook abandon the project or continue to fight?
Look, the problem with Libra from the very beginning is that it was both a very ambitious idea and entirely vague and half-baked, right? So I almost wonder if Facebook really anticipated moving forward with this. They released this sort of very vague white paper. They created this association based in Switzerland that didn't seem to actually exist. And so I wonder if Facebook, from the beginning, really, I just don't know if they intended to move forward with this project at all, to be honest with you. And now, as Michael said, I'm not sure they can.
Michael, was this ever a good idea? This was a side project, didn't contribute significantly yet to revenue. Why did they start it?
I think you could ask that question about any of the big tech companies that branch out into something that's not their core business. Why is Google in devices? And the answer is that they think it'll benefit benefit their core business. So Facebook is doing this because they have this, billion daily active user base, and they think that they can get those people to conduct commerce on the site. They want to keep them captive. So they thought that cryptocurrency would facilitate that activity. I'm not so sure that anybody is on Facebook to transact business. We're on Facebook to see our, high school friends' kids, and see our kids getting married and sharing those pictures with our friends. So no, I think that they were stretching way beyond their capacity. I think Oculus was a stretch. Yet I see how maybe we want to have virtual reality experiences with our friends. I don't see why I need currency to look at pictures of my high school classmates.
Shira, I want to transition and go on over to another story that we were following. It's all about big tech and privacy. Just this week alone, we had Twitter and Facebook, as you wrote about smartly in your column, getting caught using people's phone numbers to help target ads. What is your take on why these companies continue to disregard privacy?
I think that's a great question. And look, they definitely pay lip service to privacy, and they say that they want to give people more transparency and control over the personal information they gather on our activity and what they do with that information. But I think, look, the status quo for the entire internet age has been this gradually expanding kind of perpetual surveillance of our online activity by, a growing number of large companies, from the telecom operators, the mobile operators, to the mobile platforms, to these internet companies like Google and Facebook. And so I think they've all gotten to this point where more data, more personal information is regarded as a good thing, and they have gotten used to operating with few, if any, limits. So when you see these privacy controversies kind of blurred out into the open, it's an occasion where they have gone too far, where people start to think, wait, I don't want humans reviewing video clips of my home video cameras, as our colleagues at Bloomberg News reported was happening with Amazon contractors in places like India and Romania. So this has just become the status quo for the internet now.
Michael, what companies in your coverage are the worst at privacy transparency?
I have to say, everything I know about this I get from following Shira on Twitter. So she's prolific in writing about this. I think that nobody's transparent, and there's the line that they cross is an implied line where we consumers accept that if I do a Google search for cameras, that somehow a camera company, a Canon, is going to find out that I'm looking for cameras. Or if I, go onto Amazon and I look for a men's dress shirt, that I'm going to get an ad later for a man's dress shirt. That doesn't trouble me. That's an implied contract. I know when I go on those sites, voluntarily input information, and then I get back something that uses that information for the purpose that I intended it to be used, it doesn't trouble me. It's when Siri is eavesdropping or Alexa is eavesdropping on my conversation that I think the line is crossed. And I'm personally not troubled if my Ring camera that's focused outside is used by the police. That doesn't trouble me at all. I have the camera because I want to know if there's some creep coming up and trying to break into my home. So again, I'm probably different than some other consumers, but that line that's crossed is I don't expect Twitter to use my phone number, period. They have it for two-factor authentication only. I don't expect Siri to listen to anything unless I'm directly speaking to Siri. So, the line gets crossed when they use the data in a way that we didn't expect as consumers, and they're all pretty opaque in how they tell us what they're doing.
The third and final sort of big story that we were looking at this week is the heightened tensions between China and Hong Kong. And you have tech companies, and we learned this on Twitter, of the NBA, for example, and others, trying to let employees tweet about Hong Kong and pro-democracy, but then also trying to cave to Chinese and Beijing's demands there. Shira, as you navigate this contentious landscape, what's your take on U.S. companies being able to support a Hong Kong or Beijing, or bowing to Beijing's pressure?
Look, it's a really difficult call for any global company, whether that's in the technology industry or elsewhere, right? You have an enormous economy in China with a government that has clearly shown that it wants to sort of impose its view of the world, of itself and the world, onto the companies that it does business with, right? So the NBA fell into that trap this week, but we've seen before from companies like Mercedes-Benz and Marriott, when people at those companies, even sort of a social media intern or somebody running, Marriott's Twitter account, who tweeted about Tibet, and the Chinese government, kind of forced an apology. So I think this is just going to be the standard operating procedure now with any company that has any business with China. Even a company like Google, which pulled this kind of Hong Kong related game from the App Store. It said it wasn't in response to the Chinese government's demand, but Google, remember, is a company that kind of pulled out of China, and yet maybe they still feel pressure over the shoulder from the kind of worldview of the Chinese government.
Michael, in your universe of coverage is Activision Blizzard. Did they make the right decision by suspending or pulling back one of their employees who had that tweet about a Hong Kong pro-democracy protest?
My guess is that they didn't make a decision. My guess is that the Ministry of Culture in China reached out to NetEase and told NetEase, get this guy, suspended. And I don't think that Activision has a choice. I mean, their choice is to pull out and stop doing business there, or to comply with, the internal whims of the Ministry of Culture. And remember, this is a country that's banned Winnie the Pooh because somebody posted a picture of Obama and Chairman Xi as Tigger and Winnie the Pooh, and he didn't like being compared to Winnie the Pooh. So, they're not a democracy. I realize we just congratulated them, our president did, on 70 years of communist rule. They don't have a First Amendment. So I think that we really should draw a distinction between activities that go on inside the People's Republic of China and activities that go on inside the U.S. So the NBA, Commissioner Silver saying that he supports the free speech rights of his athletes and general managers and coaches, that's right, they're all in the U.S. But we can't enforce the First Amendment in China. And so I think, yes, Activision did what they had to do. I don't think that pulling out is in the best interest of their shareholders. And I think this was something that was compelled.
A great Tech in Week review. That was Michael Pachter of Wedbush and Bloomberg's Shira Ovide. Thank you both for joining me. Now, the Kremlin is backing a draft law to restrict foreign ownership of Russia's largest internet companies. That's according to sources. The proposal would limit foreign stakes in tech companies to 20% on national security grounds. U.S. listed shares of Yandex, that's Russia's largest internet company, fell as much as 17% following the news on Friday. That's the stock's biggest decline in a year. And coming up, Uber Eats is looking to expand with the acquisition of online grocer Corner Shop. We bring you the story next. This is Bloomberg. Uber is making a deal that will extend its geographic reach and bundle food delivery with rides. The ride-hailing company plans to buy a majority stake in the online grocer Corner Shop. That could end uncertainty for the Chilean startup. Last year, Walmart planned to buy Corner Shop and sell it to its Mexican subsidiary, but Mexican regulators said no. So why Uber? Let's bring in Bloomberg Technology's Lizette Chapman to answer that question for me. What does Uber get with Corner Shop?
Uber gets two things. It gets to expand, continuous expansion geographically, and it also gets to strengthen those markets by layering additional services on top of the ride sharing, which is still unprofitable. And so by layering on these additional services, like grocery delivery and food delivery, they're hoping to boost the overall profits.
So how does this expand their food delivery and the grocery business? Because we've talked a lot about Uber Eats and how that fits into Uber's broader strategy. What is this targeted deal for Uber Eats?
Right. This Corner Shop has been around for about 5 years. It's a pretty good win for Excel, which is one of the many venture capitalists that have backed it. Walmart tried to buy it for $225 million. It's the biggest home delivery platform in Mexico and in Chile, and it allows people to get anything, pretty much anything they want, delivered from Costco, Walmart, bakeries, pharmacy, you name it, in about 90 minutes or so for a pretty large fee. So that's what Uber gets. It also gets to answer back to investors who have been very concerned.
Walmart had faced some regulatory opposition with the Mexican regulators. Right. Is there any indication that Uber could face a similar regulatory hurdle?
Well, Walmart wanted to purchase the whole thing outright, and there was concern that there would be some that it was going to be too big. So the antitrust regulators came in and said this won't work. However, with this deal that Uber set up, they're simply buying a majority share in the service. It also doesn't have competing grocery services like Walmart does, where many people shop for food in those areas.
With the international expansion, what other countries now does this help Uber gain traction in?
Well, Corner Shop also has a presence in Peru and also in Canada. The bigger picture here, though, is how this one acquisition or majority stake acquisition fits into Uber's overall strategy of becoming like the operating system for your life or for the city or the rural area, wherever you are. So their intention is that you open the app once And from that, you get a ride, you get a scooter, you get a bike, maybe get a helicopter, you get groceries, and you get food. And with this grocery majority ownership acquisition, if it goes through, and they plan to have, they expect it to go through in early 2020, Uber is continuing with its vision to make that happen.
Finally here, any sense that this is an added cost, or does this help Uber get to that elusive profitability that investors, frankly, have been wanting them to get to?
Absolutely. The share price, it's been one of the more disappointing IPOs of 2019. Its share price is still trading at about 33% off its May IPO. And because deal terms are not disclosed, we don't know exactly how much they spent for this majority stake.
Well, we will keep guessing. Thank you. That was Bloomberg Technologies' Lizette Chapman. Thanks for joining me. And still ahead, we talk about the trade fight and the SOX index, which continues to outperform the S&P 500. That's next. This is Bloomberg. Let's get a look at the top tech calls. CrowdStrike got its first bear as Goldman Sachs downgraded the stock to a sell. The analyst wrote that while the company has strong growth prospects, the stock is trading at a high valuation relative to peers. Goldman downgraded the price target to 66 from 83. Shares of Twilio closed higher Friday after RBC initiated coverage of the stock with an outperform and a price target of 135. The analyst described the company as one of the most durable growth stories in software. He also sees upside to consensus revenue estimates. And shares of Canopy Growth fell to nearly a 2-year low on Friday. Analysts at Jefferies cut the stock to an underperform and slashed the price target to a street low of 25 Canadian dollars. The analyst said he's increasingly concerned about delivery and performance over the next 12 months. Now, sticking with a similar theme, the chip makers outperformed all of the major indexes on Friday. And this is as Trump said that the U.S. and China had reached phase 1 of a deal. Chips with big revenue exposure to China like AMD, Micron, Nvidia, and Qualcomm all jumped on news of the deal. Joining me with more, it's Ian King of Bloomberg Technology and Mitch Steves, who covers all chip makers at RBC. Ian, let me start with you. From what we know about this trade deal, what does this mean for the SOX index?
Well, all we can talk about is how, the reaction, and the reaction really, as we saw from, I think you're going to read from what the SAA had to say, was we want something more substantive. I mean, this has been going on for a very long time now. They had hoped it was just a glitch in negotiations. For the industry on a fundamental level, China is their largest market. The US is the largest producer of chips, so obviously any decay in that relationship is potentially harmful from a long-term basis. So I think we really want to see something more substantial, particularly a resolution to Huawei, before we start running around cheering.
Yeah, Mitch, give me your take on this trade deal. Did anything that you hear today change your bull thesis for any of these chip stocks?
I think that we're sticking with the same names we like, and we still like Nvidia, we still like AMD, we still like the EDA players because they're going to benefit no matter what happens out of this trade deal, and then we still like Micron as well. So the thing that's really changed is I actually think Q4 numbers are probably a little bit more de-risked now. So if people know that tariffs are not going to be in play at least until December, if I was a customer, what I would do is actually buy a little bit more just in case this falls apart. I mean, this has been going on for over a year and a half. So I think that helps your near-term numbers, and those are the kind of the higher beta plays in the space, so I'd hide in those names.
I want to come and take a look at a chart that I'm showing here on my Bloomberg terminal here, and we're taking a look at the prices of DRAM. We've also noted similar prices in NAND memory chips, sort of the bottoming out. Yet despite this, the SOX has continued to push higher and higher. As you take a look at the fundamentals of this space, have you seen a bottoming out officially in DRAM and NAND chip prices?
I think we're past the bottom of NAND. I mean, we've been writing that for a long time, that we think Q4 is going to kind of be the bottom. DRAM, I think we're going to be a little bit flattish, but I think we're essentially at the bottom. We've been saying within the next 2 months it'll probably be officially done. All you need is data center to come back. So the big debate is that Intel, AMD sound a little bit better on the data center side, and I think the consensus view that one of them is lying is incorrect. I think the actual answer is that demand came back. So if demand came back, and data center has significantly more DRAM, then that means both of them are just seeing improving environment. And then, so if that's the case, you want to be long NVIDIA.
Ian, you've been nodding your head a little bit. What's your take?
Yeah, I mean, there are a couple of ways of looking at this. I mean, the first half of the year was arguably, well, statistically one of the worst declines in overall revenue that the semiconductor industry has had, basically in at least 10 years. So you could look at that, as a lot of Mitch's colleagues are doing, as things aren't going to get any worse. This second half recovery that the industry has promised us is going to come along. Some of the other analysts who are a little bit more pessimistic about it are saying, look, we haven't really seen demand come shooting back yet. We've seen sort of one or two green shoots here or there, but probably not enough to justify that massive run-up in stocks that we've seen.
And if we say that trade tension resolution was a tailwind, as you look into earnings, what are you hearing is one of the bigger headwinds still facing these stocks?
Yeah, I mean, inventory was one of the concerns, as Mitch just said. If you're buying ahead of tariffs going up, then by nature you're putting things into inventory. Inventory historically has been one of the most scary things in the chip industry, because a lot of these things, they don't improve over time. This is not like buying fine wine. These have a finite life and they get replaced very quickly and the prices go down. So inventory is not a good thing to have.
Mitch, final word, 20 seconds. Top pick as we head into earnings.
For the quarter, we think AMD is probably the best one. It's probably the most hated it's been in a while after they announced so many product wins and the stock just doesn't move. So I think they're going to execute. Numbers are going to go up for the first time in a long time. And then secondly, I mean, our top pick for a while has been Synopsys. I think that's probably your easiest play in semis.
Okay, we're always looking to make headlines here on Bloomberg Technology. That was Mitch Steves of RBC Capital and Bloomberg Technologies. Ian King, thank you both for joining me. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.